Good morning, everyone. Welcome to our Thursday morning session. Hang on one second here while I get you my charts. Okay, the market's just opened. Okay, it's been an interesting evening in the NASDAQ. Let's take a look here on the Eagle. You can see the market tailed off pretty much right from the market open, or the London open, I should say. Big decline. Now we're working into a little bit of a pullback of sorts. Of course, we haven't had, well, to me, it doesn't look like we've had a test of the extreme. I suppose you could look at it down here and say, oh, well, there was our test of the extreme. What I'm thinking, though, because the market came down so quickly, or so steadily, is that this may be building into a bear flag, and we may finally see the NASDAQ tail off. As I've mentioned, a lot of traders have been waiting a long time for the NASDAQ to decline. Trade forecasters saying that we're going to be in trend mode for a little over an hour this morning. Okay, here's our green bar sell. And there's the bar that flipped the ATR over. I'd much rather dial down the risk on this particular trade, and if it gives me a chance, I'm going to do that. Oops. Oh, come on. All right, so there's a green bar sell that the market is paying no attention to, so I'll cancel that order. You can see here on the Raptor quite clearly that we've got this little bit of a sideways trading range going on. Oh, look at them go. This is going to look like an opening gap to NASDAQ traders because the market left off up here yesterday. Nothing during the Asian session, so this is right through here is going to be a little bit of an opening gap. Ooh-wee. The advanced decline very lopsided here. Jim says we've got about negative 600, or pardon me, positive 600, negative 2,000. That's like a negative 1,400 on the advanced decline. That's very bearish. Excuse me. I'm sorry, did I just cough in your ear? Oh my goodness, I've been trying to get to my mute button. I'm very sorry about that. All right, let's shoot a trend line across here. So we'll put a trend line down there and we'll shoot another one up here just for kicks. Okay, here comes that green bar sell again. Here's the bar that changed over the ATR. I'm going to have to go just a little further. I wanted to get my entry up here because this green bar sell was already in sync, so I'm very late on my entry here. Not at all happy about that. I'm going to roll my break even just a touch further. Although I suppose, no, doesn't matter. I'll leave it like this. All right, let's see whether or not they are truly interested in heading lower today. Yeah. Almost an expanding wedge type formation here, isn't it? Crude oil also giving us a trend signal on the eagle right here. This one's full on with trend. Crude oil, of course, very difficult to trade without risking a bucket full of money. So we'll set that on the sidelines for now. Yeah, Jim says the YM has made a new low, but the NQ is holding tough. Darn NQ traders. Wow. Now there they go. Look at that. My goodness. They are going to get into that opening gap. All right, so here we've got our trade. The sellers had better start picking up the slack here, pushing lower, and now I'm going to start rolling my stops, assuming, of course, that this bar finishes lower. So I can get ready with my, say, bar high-low strategy. And this will essentially be the last chance for the sellers to get their act together. Thanks, Jim. Jim's giving me the play-by-play here. He says the advanced decline still falling off. It's about negative 1,600 now, which is all very bearish. Or should be bearish. You wouldn't know it. Oh, look at that. Wow. Well, that was a little unfortunate. Oh, we got a good, look at that. Nice first micro macro cross here with decent follow through. Wow, that's the NQ putting in a bit of a push. I think they're up right now or near yesterday's lows, if I remember right, around this 45.15, 45.20 area. Just got to wait for them to produce another signal. Crude oil tailing off a little bit, so our crude oil trade making some progress. There's crude oil. Almost halfway to our first profit target. Yep, just under half. So we'll let that churn away. Yeah, Jim says, is this an inverse from yesterday? Melt it up later on? Yeah, I don't know, Jim. Your guess is as good as mine at this point. I suppose, I don't read too many commentaries, but wherever I've been looking, and there's very few people that I read. A lot of the stuff that I read is not so much information, but editorial. And a lot of the guys, there's only a couple things that I follow. I usually follow them for the humor rather than the market analysis. But it looks as though everywhere you look, everybody's expecting the stock market to head lower. And yet, you get this going on the NQ where it keeps heading higher. Now here we have a real nail biter. We have a 4-arrow consolidation and a macro pullback signal. Now talk about testing your nerve. Oh, darn it. And then I was a little bit too slow putting the signal on. Testing your nerve, and now we're into yellow bars. So I would try to give it a little bit of a wider berth here to start. And then look for the buyers to come back. So hopefully this yellow bar, there we go. Now the buyers are back. I would roll my stop, start to consider rolling my stop up here. Maybe not, snuggling it up super tight, but getting it a little bit closer. Ideally, I like to see 2 bullish bars before I start rolling my stop. Well, in this case, 2 bullish bars. So if this bar gets up there, come on, get up there, then definitely time to start rolling your stop up. There you go. So now stops at least to here. And I would probably go with something like the bar high-low, which will automatically roll my stop 1 or 2 bars back, whatever I set. Now our break-even trigger would probably have been hit, so we would be sitting right about there. And then they just tagged us at break-even. I'm going to leave this trade on just to see whether or not we finally do hit the profit target off of this macro pullback / 4 arrow consolidation. Come on, get up there. If you didn't have a break-even trigger going, you would certainly want your stop just below here. Oh, look at that. They're just leaving us hanging by a tick. What's up with that? Get up there. I like what Michael writes here. Mike writes, financial commentary is much like the weathermen. They're great at telling us what happens after the fact. Yes, isn't that the truth? Here's our crude oil trade. Just about to our profit objective. You could bring it down to break even. We're about 80% to our target, which is normally the time that I roll a trade to break even. No, looks like we would have been stop break even or maybe a small loss on this one. That's kind of significant that you get a macro pullback and a 4 arrow consolidation not reaching its profit target, just being 1 tick shy of the profit objective. Maybe that's a clue. Oh, way to go, Jim. Jim managed to bag 20 ticks out of the YM on a short. Well done. Here's a first micro macro cross now to the downside. Ay, chihuahua. All right, let's see if we can run it up here and do the same thing in reverse. I don't know about you guys, but this is looking, and girls, but this is looking a little bit like maybe a bull flag. Could it be after all this that the market is still going to rally? All right, sellers, come on now. There we go. Come on. All right, so the sellers definitely a little bit more active than the buyers. You wouldn't know it from this rally that we saw right here this morning. That was bringing us into the overnight gap, I suppose, or at least on the NQ. I think the E-mini and other tools were kind of left a little bit short of that opening gap. Okay, we got a little bit of a tug of war going on here. Let's see if we're getting comparable signals. Oh, we're getting a trend change signal on our Falcon. So we have our down, our up, our down, and we get a chance on a second push on this entry. Oh, and they slipped us a couple of ticks too. I'm going to try to hold my stop for just a little bit here. The danger, of course, is this trend line right here where they're looking to find some support, trying to give the sellers enough room to get back in here and start pressing the buyers. These types of trades too, when the market doesn't really have a defined direction, when it seems to be struggling for a direction, I tend to dial down the risk amount. I didn't do it on this particular trade, but that's what I will tend to do most of the time. Real battle going on this bar. Oh, not again. Where did these buyers come from? Okay, well, our primary support line seems to be holding them off just for the moment. In fact, I'm going to roll my stop just on the other side of there. No. Darn it. Get down there. I didn't realize when I sold this exactly how close we were to the trend line. That might not have been the best scenario, or I should have risked it above the swing high. That would have been the better plan. In fact, what I'll do, I know this isn't correct for my position sizing, but this is the area when you're taking a trade like this. Okay, yes, it's a trend change signal. The market is in an uptrend, at least a little bit. We do have some trend line support below here, but it is still a trend change signal. So what should you do? Well, number one, try to dial down the risk amount. I was a little bit too quick putting this trade on. I should have dialed down the risk amount. Number two, risk it as far back as you can, ideally above the swing high. Why the swing high? Well, because this is the area where you will know without a shadow of a doubt that you are on the wrong side of the trade. So we're going to give the sellers every opportunity to get back, and you can see that they didn't take that opportunity, the scoundrels. So let's see, could I have taken that trade with 1%? Yeah, see, that would have been the thing to do. Then if it bounces, it's still a viable signal, but at least I've reduced my risk exposure somewhat. Wow, look at the NASDAQ go. Unbelievable. Yeah. Let's take a look here on the Eagle. Mike says he took an Eagle trade off of the hard edge bounce. Was that a correct analysis? Absolutely, Michael. Well done. So when the market is trending correctly, your hard edge it's going to alert you to trade opportunities. And very often when the market gets down here, it's essentially making a bull flag. For those of you unfamiliar with the terms, a bull flag is this little retracement that occurs within an uptrend, and a bear flag is the little retracement that occurs within a downtrend. So here we have a little bit of a downtrend. This would be a bear flag. Then we generate a sell signal, a green bar sell. And then we try to resume the trend, generate another little bit of a bear flag, and then the trend finally continues. Here in the uptrend, and you can see that all these pullbacks, these bear and bull flags, occur near the hard edge. So the market came out of there, produced a buy signal, so everything was in sync. And let's just do it on the hash mark for convenience sake. And we're the better part of the way to our high probability profit objective. So yes, well done, Mike. Wow, everything is getting a little bit stronger. This is a very crazy morning. Here's crude oil now on the Falcon producing a trend change signal. So the trend line changed from green to red. Here's the down, here's the up, here's the down. And we get an opportunity for a second push on this one also, so we can enter just below this candle. I probably would only give it this bar here if it doesn't start to turn around soon. And then it would be time to cancel the trade because the market will, the Falcon will generate another signal. All right, looks like that bar is going to complete higher, so we'll throw that on the back burner for now and wait for the next opportunity. Wow, what a wild morning. Managed to catch a trade to the downside, but it does seem like the buyers are in control today. Yeah, Mark says that Mike's NQ trade worked out. Yes, sir, it sure did. Well done, Michael. That was a very good quality trade right there. Now, even if you had, so here's the signal, and we've been following the ATR line a little bit as a filter. So you would let the next bar turn the ATR over and perhaps use that as your signal bar, in which case it would look like this, but I do believe that you've also hit your profit objective here. Yep. Way to go. Yeah, Jim says I'm seeing a lot of megaphone patterns and not trend line patterns. I would agree with that. It seems like the market is expanding on us. Here the hawk is a little bit too big. Let's take a look at the Falcon. So what Jim is referring to is the market seems to be expanding, right? When you're shooting trend lines, normally these trend lines are running fairly parallel to each other. I suppose there's the immediate channel. Go back here to our eagle. So we'll shoot a line across yesterday's highs and see where that falls. Oh no, we're clear through that. Soybeans a little bit quiet right now. I'm gonna flip around, see if we can find something else that might be interesting. Wow, Jim knocking it out of the park. He just got out of his calls, his options at plus 42. Wow, 42 ticks. Way to go, Jim. Michael's asking, other than the DAX, what would be a good market to watch overnight? Well, overnight from a North American perspective, of course. Anything that would be native to a European time zone. So you've got the DAX, of course. The Euro, that would be the 6E. Or if you're trading it on a Forex platform, that would be the Euro-US dollar pair. The British pound. The British pound is nice because it's a lower value tick. So it's 6 1/4 a tick. This is the British pound on the Falcon. And if we go here to the overnight. So London opened somewhere around here. You see we get a nice buy signal, a trend change signal. And that had some very decent follow through to it. Actually, it was very brisk last night. And then a few hours later, they developed another trend change signal right there. And that one too had some nice follow through to it. So the British pound is a good one. If your trading assortment allows it, the CAC 40 is a good market. That's the French stock exchange. If your account allows it, gold is always a good one. Let me see if I can get the CAC. And Brent oil is the European version of the crude oil market. Oh, what do you know? I do get it. So here's the CAC 40. And this is on the sped up I'm sorry, I'm drawing a blank on words today. Oh, cooking with too much aluminum cookware. These are our sped up settings that we use for higher tick value instruments. I wouldn't necessarily use those for the CAC. I would go with the defaults settings, but just so that you can see what they do in the overnight. Yeah, see, because these signals are printing a little bit too fast. Actually, what I can do is I'll put it on here. 1 second. Okay, let's put that away. Let's get the British pound back there. But you're going to see it makes some very nice moves. Jim keeps giving me a hard time here about medicinal marijuana. All right, here we go. Let's take a look here at the CAC on on the Eagle. And you can see very civilized. Look at these moves. You know, they pick a direction, they give you a with trend direction, and away they go. They change direction, they pick a, they give you a signal, and away they go. That's very civilized. Now let's see if we're just going to try this here, see if, oh, it will let me take a signal. Okay, I don't know if that's, I haven't tried it on the real money account, so I don't know. You're going to have to talk to your broker, make sure that you can get access to some of these accounts. But I'm going to leave that one in the mix. The nice thing about the CAC 40 versus the DAX is the DAX can be very fast and very expensive. But like I say, the British pound also a good choice because of the lower tick value. Speaking of which, here's the British pound about to generate a sell signal here on the Eagle. So everything is with trend, and we could cover it probably up here. So you see, even covering that wide in a case like the pound, not too terribly expensive. Now let's see where the pound has been and where it might be going before I get too excited here. So there's the low. The market broke a swing low there. So this would be push number one lower. There's the reaction. There's push number two lower. There's the reaction. Now with the Eagle, we tend to only see two, maybe three pushes to the downside. So this one might be running on vapors. I'm going to watch this one as it gets a little bit closer toward these lows. This may end up being a test of the extreme and the market actually getting ready to reverse and go the other way. Don't know yet, but you want to balance your position with how far the market has already come. And where is that low? That other low is right down there. So we do have a little bit of room to move here. Well, the advanced decline getting a little bit stronger. Thank you, Jim, for the play-by-play. So we started the day, what was it, like negative 1,700 or 1,600? And now we're only a negative 1,000. So overall, see, this is the thing. If you're going to watch numbers like advanced decline or tick or VIX or any of these others, what's important to remember is that these numbers are relative to each other. They're not absolutes. So, I started the day when Jim told me that the advanced decline was terribly lopsided when it was negative 16 or 1,700, whatever it was. On the surface, that is very bearish, right? That number alone, a negative 17 or 1600 on an advanced decline, is very bearish. However, if you go from negative 1600 to negative 1000, that's actually bullish. So you always need to compare these numbers to where they are, where they've been. And not treat them solely as absolutes. And Jim says it was done quickly too, which is true. A lot of times, if you're watching an indicator like that, it's a much slower progression. Like it will creep up or creep lower, but for it to move that quickly within the space of 45 minutes to go from selling 1,700 stocks to only selling 1,000, that's a big difference. Okay, the NQ slowing a lot from what it has been doing, and you can tell that just visually by how long it's taking these bars to form. Okay, we've pulled back to the eagle, or pardon me, the raptor hard edge. Sometimes this is when we look for a double pullback type formation, where it's essentially going to hit the hard edge twice and then rally. Or maybe rally. It's interesting here that the hawk has traded all the way back to this other trend line. We're into yellow bars, so I'm not going to take the signal. But we'll see whether or not they're still honoring that trend line or not. I would agree with what Jim is writing here. Jim says, you know, Eric, all these indicators should give you a basic reference, a feeling of sorts. Having a lot of market time allows you to see the bias and or a change of bias that is ready to occur. Having a lot of market time is key. It reminds me of there's an Italian trader, and I'm sorry his name escapes me. And I saw him on an interview, and he said, if you want to learn to trade, watch the market for, I think he said 8 hours a day. It wouldn't be 8 hours, but watch the market every day for 10 years, and you will be able to trade. Now, of course, a lot of people don't want to make that kind of investment, but his point was similar to what Jim is saying, is that you need to spend a little bit of time with the markets to see them move, to see how they react to different seasons, to see what they do around reports. And unfortunately, none of us are really long on patience. If nothing else, you need to learn how your tools work. Right? You need to learn how your DTS tools work, gain some trust in the signals. Again, that's why I encourage you to journal your trades and not just the entry and exits and end result, but what you saw, why you took the trade. And don't ever beat yourself up for taking a losing trade. What we are doing here is very difficult, very difficult. And losing trades are bound to happen. It's a nature of the business. It's a cost of admission, if you will. But if you've made a bad decision, try to learn from it. Like the trade here I took earlier in the Falcon. This trend change signal right here. What did I learn from that? Well, I knew it was looking like a bear flag. I had many tests of the extreme here, but I didn't really have a proper test of the extreme. So I should have immediately dialed down the risk amount before I did anything, before I even reached for the set prices button. I should have dialed down the risk amount so that if the trade does go sideways on me, at least I've only lost, well, I've lost less. It's not to say I still would not have taken that trade. It is a trend change signal, but caution would have been in order. Perhaps I should have even made a note in my journal, next time you're near the trend line, let it react to the trend line, and then place your order, in which case I would have placed my order down there and up here, and the market would have never brought me in. So these are all things that you learn by doing. You actually learn a lot in trading by doing and paying attention to what you're doing. I get emails from members all the time. Well, I shouldn't say all the time. And they're fair questions, and I appreciate your questions, but I get questions like, well, why didn't this trade work? Or why didn't this trade work? Or why didn't this trade work? And and sometimes the questions are genuine, but sometimes it's the people are just blindly following signals without giving any thought to what's going on. A first micro macro cross is a high probability signal, so you should take that. A yellow bar signal is a weak signal, you should avoid that. So if you take a yellow bar signal and it fails, you shouldn't be surprised, right? So these are the kinds of things that you need to learn and the kinds of things that you need to do in order to gain confidence in not only in your abilities, but like I say, also in your tools. That's right, like Jim says, positive or negative. That's one of the biggest things. Trade it and learn from it. If no one's ever told you this, I hate to be the one to have to be the bearer of bad tidings, but you will incur losing trades from time to time if you're trading. I think it was Ed Sequoia who's, I don't know, he seems like a fairly clever fellow because he's quoted a few times, but I think it was him who says, if you want to avoid whipsaws, stop trading. And this is from one of the most famous traders of recent times. So if he's prepared to take a losing trade, what's that say for traders like you and I? All right, you guys, things have slowed here just a little bit. I'm going to go grab a drink of water. My throat is so dry. I will be right back. Okay, I'm back. All right, so what have we got brewing? Not much at the moment. Crude oil still sort of bearish. Well, sort of bearish. Still very bearish. We do have a 3-arrow consolidation here and a macro pullback. With crude oil, we know that the consolidation patterns normally develop after 3 arrows, not 4. Well, although here was a 4-arrow consolidation. But because crude is a faster market, sometimes we get ready to take a crude oil trade after the 3rd arrow. We also have the opportunity for a second push on this entry. And this might be the kind of trade where you just want to throw a onesie in, just given that the market has slowed somewhat. Again, you need to take into consideration, where the market has been, where it's going. Look at the size of these legs. Look at the size of that leg compared with the size of this leg and the size of this leg. Is it just me, or does it look like the market might be slowing somewhat? Okay, well, that was a good little hit and run. So the signal was still valid, but now let's see how far this actually goes. Maybe we just squeaked out of there with our profit objective, and we're going to see the market start to get a little bit stronger, perhaps trade through this high right here, this little swing high, come down, give us a test of the extreme, and then start to waffle a little bit and eventually end up going higher. Somewhere around here, we will probably be generating a first micro-macro cross signal if in fact the market is getting ready to reverse. And how do I know that? Well, because it does it time and again. Oh, well, good thing we caught that little crude oil trade. We have a first micro-macro cross here on our hawk, which had a very nice follow through. So it looks like the buyers have done their damage for the moment, and now the sellers are starting to dig in. So decent opportunity here. This first micro-macro cross, I would have taken it here. I probably would have, if there's no obvious place to run your stop, my eye always goes toward the bend in the macro line. So I probably would have risked it here. Ideally, risking it way up here, but that's only going to give me a single. If I'm only going to go in with a single, a lot of times I will leave it on as a runner. So on the off chance that the market actually makes a decent move, maybe I can do a little better than the $50 target. But I probably would do something like this so I can at least get in with a couple of contracts, do a little hit and run, take my $100 and wait for the next signal. Well, we haven't been doing too bad. Took a stinker of a trade in the NQ, but the crude oil trade has worked out. We're still laboring a little on the British pound trade. Let's see if we can't pick up another one here, though. So here's that larger channel that we've been following. We're into the hard edge of the eagle, and normally we anticipate some sort of reaction here. We've already drifted into red bars. We'll see if it comes out of here with a red bar buy. We do have a fair amount of room to test the upside here. It's a little confusing also because we're getting some mixed signals here, aren't we? We've got a hawk, which is definitely bearish, a falcon, which is definitely bearish, and an eagle, which is mildly bullish. Another signal brewing here on the British pound, a late filter entry signal. So our filter is out of sync. The trend line is not. I can tell you that if this bar finishes low, it will flip the filter over, so I can actually anticipate the entry. Probably cover my stop to here, at least initially. So we've got the warning dot. Sometimes you need to be a little bit careful when you're doing this also, when you're anticipating the entry, because on something like the Falcon, you can get 2 warning dots before you print a signal. See here, we got warning dot, then the signal. The same thing may occur here. I might go warning dot, signal. So I'm being a little bit extra aggressive on this one, which hopefully will be all right. Just waiting for the next signal. Nothing else really going on at the moment. All right, things are getting a little more interesting. So working on a macro pullback signal here on the hawk. And now the Raptor also trading into the hard edge. Okay, an early trend change signal now on the Falcon, just the makings of it. The trend line has changed. We have our up, we have a down, we have an up, but no buy signal yet. And I'm still watching this red bar buy that hasn't bought. We've got the macro pullback here that we can do two ways. Something that I don't do very often is trade the failure of a macro pullback because it is a counter trend signal. But if you didn't know already, and I don't mention this to you guys very often because I don't want you looking for counter trend trades, but any signal, any solid signal like a first micro macro cross, you can also trade the failure of it. So here's a first micro macro cross. You could set up to sell the failure of the first micro macro cross. But you can see most times we don't do that because the first micro macro cross is so reliable to the trend side, to whichever side it's signaling. The macro pullback is another one of those signals which is very reliable to the trend side. I was considering buying this one, however, because of what I was seeing on the other instruments. I was looking at the Eagle here, which has since given us our red bar buy. And this another one, maybe I'll just throw a onesie in it because of the way the market is today. And the Falcon, we were starting to see the trend change here. But the market definitely had a little bit of a tipping point. Fairly content, I would say. It's almost right in the middle of this morning's trading action. Right, or here I can highlight it better on the Raptor, which has the first hour highlighted. You can see, well, now we're a little bit more to the upside. But if we take into consideration that this is the morning range from here to here, if I were to throw a fib level on there, we were hovering around the 50% level. Yeah, it's starting to drag its feet a little bit. Working on a possible trend change here on the Falcon. So we have our up, our trend line has changed color. Here's our down. Filter is already green. Now we just need it to come back with a buy signal and we'll be off to the races. Okay, a lot of yellow bars starting to cluster here in the hawk, which confirms what we've suspected, that the market is kind of going sideways now. Well done, Mark. Mark says he took a little trend line trade here. He says, I looked at the trend lines you drew on the Eagle, and I decided that since there wasn't a test of the high yet, namely the test of the extreme up here, that he would play the bounce off of the lower trend line and took a 2-contract trade at 45.05. Very nice. And now he's out for a profit of $400. Well done, Mark. Really, that's great. He said a bit risky, yes, but the testament to the strength of how trend lines can work. And Jim says the same. He says, good job, Mark. Yeah, trend lines, I like drawing them on there, not always to trade, but if nothing else, to give me a feel for what the market is doing, as well as possibly a feel for what other traders are thinking. So for instance, if I draw a trend line down here like this, and I can see the market start to overshoot, a lot of people think that's bearish. It's not, it's actually bullish. But like Jim pointed out earlier today, we're getting a lot of these expanding megaphone type patterns on our trend lines. And when you have a trend line drawn, you can usually get a pretty good idea where other buyers and sellers are thinking of buying or selling. So when I draw a trend line, a lot of times I'll draw it backwards, but I'll also take the early pivots into account. Some people don't pay attention to those. But I think you should. All right, so the buyers trying to muster a rally. Hopefully we will see this bar continue higher. If so, that's probably a good time to start bringing in my stops. So I'll get that ready. Oh, come on, buyers. Now everything's kind of going sideways at the moment. Even our Geiger counter, you can see how it's waffling back and forth, back and forth. Hey. If you're watching for 4-arrow consolidations, or in the case of crude oil, 3-arrow consolidations, when you start to get consolidation after consolidation, it negates the pattern. So what you want is you want a consolidation and then a move. A consolidation and a move. A consolidation and a move. When you start firing a lot of arrows and the market's not going anywhere, that is no longer a 3-arrow or 4-arrow consolidation. See, here's crude oil with your 3-arrow consolidation. Also happens to be coinciding with your first micro macro crossover signal, but you got 1, 2, 3 arrows, it goes. One, two, three. This one gave you a little bit of heat, but eventually fell down. 1, 2, 3. This one actually produced 4 arrows, also coincided with a macro pullback, had some follow through. So just a little something to keep in mind when you hit, and crude oil will do this. This is characteristic of crude oil, where you hit these skids where the market starts to print 4, 5, and 6 or more arrows. That's no longer a consolidation pattern. All right, so we would not be trading this as a 3 or 4 arrow consolidation. Well, the buyer's got to show up here sooner or later. Well, the British pound has pretty much gone flat, but it's near the end of the European session, so that's not a real surprise. Crude oil also kind of migrating sideways at the moment. Not much going on there. NASDAQ seems perfectly happy where it is. Well, we'll hang with them for a few minutes longer, but thank goodness Glenn asked a question. All right, Glenn's asking about the Raptor. Glenn asks, on the NASDAQ Raptor, should the filter and cloud settings be equal, such as 10? What would you suggest? Good question, Glenn. I've actually been playing with the cloud settings and the filter settings a little bit. I have changed my cloud setting to 8 and my filter setting to 10. Only because for a while there, it seemed like they weren't syncing up enough. So in order to try to get them to sync up a little bit better, I sped up the settings slightly. That is one thing about the Raptor. It does allow a little bit more tweakability, if you will. There's more things that you can adjust on the Raptor versus the other DTS tools. A lot of times when I draw a trend line, I will draw it backwards, as I mentioned. So I'll actually start from this point here and draw to that point there. Looks like the sellers are taking the market back. So I'm watching the Geiger counter here. There's obvious support down on these lows right through here. Wow. Yeah, kind of tough to get a handle on what they're doing today. And we haven't really generated any signals of late. And the market's been paying off both directions, which adds to the confusion a little bit. Usually the market's only going to pay off one direction. It's like a bad slot machine. But at least if you know what that direction is, you can try to take advantage of it. Wow. All right, here's the first micro-macro cross signal. This is one of these blind faith signals. Let's throw a runner on there. And we'll put a onesie in play. And I'll take it below the low and I'll risk it up there. I wanted to enter on the hash mark. Oh, and they slipped me too. I wanted to enter on the hash mark, but by the time I got the trade in, it was already beyond there. All right, well, we're to break even, so now let's go to our parabolics. And see if we can actually pick something up here as it gets back down to the low of the day, which was where, about 44.90-ish. Oh, come on, you guys. So here were the lows. We had a little breakout and a retest, and the subsequent move lower. Don't tap me at break even. Just don't. Come on. Stinkers. Come on. Oh, we're just hanging on by a thread there. Yeah, here's a problem too. Jim says the YM, the E-mini, and the Russell all broke the 10 a.m. low, but the NQ didn't. Never have I seen the stock indices so out of correlation as we have lately. Normally, the YM and the NASDAQ are almost walking lockstep with each other. Whew, that was close. Oh, we're not out of the woods yet, though. We got to take out this low at 44.96. Oh, no, there they go. Doggone it. Scoundrels. Oh well. They're going to, it was worth a try. And had I taken my profit on target, I would have had my profit. Instead, I tried to get cute and run it below the low, which it's not happy to do at this time. And no matter how much I held my breath and crossed my fingers and toes, none of it helped. Well, at least it was a break-even trade, right? Could have been worse. All right, you guys, I think we're going to button up the room. The market seems to be content to meander sideways today. I would have favored the bears early on, but of course we saw that big rally up. Now I think we're definitely more into a bear market. And as I say that, the hawk is sneaking back in above these highs. If it gets above these highs and gets back into here, I think we're just going to see it range sideways for the rest of the session. So you've been warned. Crude oil continues to plod lower, although not very aggressively. Our pound trade also kind of moving flat to sideways at the moment. I might hang on to that just a little bit longer. I won't expect huge profit out of it, but if I can print something in the green, I'll probably take it. Okay, you guys, we'll see you tomorrow morning for Friday's session. Talk to you then. Bye for now.